You ever get that deer in the headlights feeling when someone says FHA versus conventional versus VA versus USDA? Well, stick around. I'm about to clear it all up and save you a boatload of confusion. Hey there, everyone. Welcome back to our Home Buying 101 series. I'm here to answer one of the biggest mortgage questions. What's the difference between conventional loans and those government-backed options such as FHA, VA, and USDA? We'll talk credit scores, down payments, mortgage insurance, debt-to-income ratios, and all the other little details that can make your head spin. Let's break it down into bite-sized chunks so you can easily figure out which loan might be right for you. Ready to jump in? Great. Let's get started with the OG mortgage, the conventional loan. So you think you're stuck with a 20% down payment for conventional loan, right? Well, surprise, there are ways around that. Let's talk conventional loans for a minute. Loans that are not insured by the government, but instead follow guidelines from Fannie Mae and Freddie Mac. A couple things to keep in mind. So credit score is generally 620 or higher, aiming for 740 plus gets you some of the best rates. The down payment, you can go as low as 3% for first-time homebuyers, though 5 to 20% is definitely more common. Then there's private mortgage insurance, or PMI. It's required if you put down less than 20%. The good news, once you hit that 20% equity, you can ditch the PMI payment. There's debt to income. Typically, that DTI maxes out at 43 to 50%. It's best for folks with good credit who want to avoid paying mortgage insurance for the full life of their loan. Looking for something a bit more flexible on credit scores or smaller down payments? Well, stay tuned for the next part where we talk more about FHA loans. So for FHA loans, did you know that you can qualify for a home loan with a credit score as low as 500? Yeah, that's the FHA loan for you. Say hello to FHA loans, which are government-backed to help buyers with lower credit or limited savings. When it comes to credit scores with an FHA loan, 580 plus if you want that sweet 3.5% down payment, but if you're between the 500 to 579 FICO, you might still qualify, but you'll need more like 10% down. The down payment is just 3.5% for an FHA loan usually, but it does require mortgage insurance premium required for the life of the loan unless you refinance it to something else. Now, the debt to income ratio can often be more flexible, around 50%, and it's usually best for first-time homebuyers who have less money to spend on their down payment and maybe not so stellar credit. But what if you're a military service member or a veteran? You might have zero down option that beats everything else, which would be the VA loan. Let's cover that one next. Are you a veteran or active duty service member looking for a zero down mortgage with no private mortgage insurance? Well, the VA loans are definitely then calling your name. So VA loans are exclusively for eligible service members, veterans, and surviving spouses who have earned this benefit through their service to the United States. Now, officially, there are no minimum credit scores, but many lenders want to stay from 500 or higher. The down payment, well, 0%. That's right. 0% down payment. This can save you a ton every month because there's no PMI either. Now, there is a funding fee. There's a one-time fee often rolled into the loan, but it's waived if you receive disability as a veteran. The DTI can go north of 50% in many cases if the reserves are solid. It's a golden ticket kind of loan just for those that have earned it. It's got no mortgage insurance, 0% down, and great financing terms. But maybe you're not a veteran, but you still want that 0% down payment loan? Well, the USDA loan might be right for you. Now, that one comes with a couple caveats too that we'll cover in the next segment. Do you think you have to be a farmer to get a USDA loan? Well, think again. This might be your zero down rural getaway. So USDA loans are aimed at rural and some suburban homebuyers. The eligibility is that the property must be in an approved rural area, and lenders prefer a 640 plus credit score, but it can vary. Now, the down payment is 0%, which is another fantastic no money down option, but it has an income qualifier. There are income limits. You have to be under 115% of your area's median income. Now, the debt to income ratio is typically around 41 to 45% at the high end. This is really best for buyers who want a rural or suburban lifestyle, meet the income limits, and love the idea of no down payment. All right, it's time for the lightning round. Here's how these loan types stack up side by side: short, sweet, and to the point. Check out this chart to compare conventional FHA, VA, and USDA loans. So every loan has a different feature. The conventional FHA, VA, and USDA, are they government backed? We say it here. Minimum credit scores, down payment, mortgage insurance, DTI limit, and maybe who they're best for. If any of these resonate with you, well, this might be the loan you need to look after to buy your next property. Okay, so you've got the numbers and the benefits. Well, how do you pick the best fit? Let's break down the which one is best for you right now. Look, if you're still feeling overwhelmed, don't worry. I'm about to give you the no fluff way to pick your perfect mortgage match. Here's the deal. FHA can be great if you're a first-time buyer or have lower credit or some heavy credit hits. VA is an incredible zero down, no PMI option if you're eligible through your military service. The USDA is awesome if you're looking in a rural area and meet the income requirements. Conventional is perfect if you have a decent credit and want to drop the PMI once you hit the 20% equity margin. Ultimately, it depends on your credit score, your savings, eligibility, and where you want to live. If you need help sorting out which loan fits best for your situation, let's chat. I can point you in the right direction and maybe save you a lot of money along the way. Got your pick in mind? Perfect. Let's wrap this up and get you one step closer to your dream home. Hey, wait, before you go, here's your friendly reminder. The right mortgage makes all the difference. So thanks so much for tuning in. If you found this helpful, give it a like or a share. Better yet, comment with your burning mortgage questions. Let's build your perfect home buying plan together and get you into the home of your dreams. But until next time, happy house hunting. And remember, knowledge is mortgage power.